Hello and welcome. Inflation isn't just a buzzword, it's a reality that affects your money every single day. Did you know that if inflation is at 3% annually, something that costs $100 today could cost over $134 in just 10 years? That's your purchasing power dwindling right before your eyes. In this video series, we'll dive deep into not just surviving, but thriving in an inflationary world. We'll uncover the smartest strategies to shield your wealth, from the traditional power plays like real estate and diversified investments, to modern maneuvers like digital currencies and tech-savvy financial tools. Whether you're looking to enhance your investment portfolio, optimize your tax situation, or kickstart a side hustle, we've got you covered. Stay tuned as we decode the complex world of finance into simple, actionable steps that you can start applying today to protect your future. Ready to beat inflation at its own game? Let's get started. 1. Decoding inflation. What's eating your money? When we talk about inflation, it's basically the rate at which the general level of prices for goods and services is rising, and subsequently purchasing power is falling. Central banks attempt to limit inflation and avoid deflation to keep the economy running smoothly. Consider this: if you stash $100 under your mattress today and inflation is at 3% annually, in about a year, your $100 would only be worth about $90 in today's money. That's inflation eating away at your money. Now, why should you care? Well, without taking steps to counteract inflation, your savings could lose much of their value over time. Think of inflation as an invisible tax on your cash holdings. If the average inflation rate moves to about 2% to 3% per year, the value of money can halve in just about 20 to 30 years. That means the pricey coffee you love might cost twice as much in a few decades. 2. Beyond savings, smart habits to outpace inflation. Saving money isn't just about putting it away in a bank. With average savings accounts offering less than 1% in interest annually, inflation can make your savings almost futile. Here's where smart financial habits come into play. Investing in the stock market has historically returned about 7% per year on average, after adjusting for inflation. This is a fundamental shift from just keeping your money in savings accounts. Moreover, considering bonds or fixed income securities can also be wise. They offer predictable returns, though typically lower than stocks, but are generally safer. Diversifying your investments across various asset classes can help manage risk and combat inflation effectively. Remember, it's not about avoiding risk. It's about managing it wisely to maintain the buying power of your savings. 3. Investment shields. Building your anti-inflation portfolio. Investing wisely means knowing where to put your money to protect it against inflation. Real estate, for instance, has often been considered a strong hedge against inflation. Property values and rental income typically increase with inflation. Thus, owning property can be a smart move as costs go up. Another great option is Treasury inflation-protected securities, TIPS. TIPS are government bonds that are indexed to inflation in order to protect investors from the negative effects of rising prices. The principal value of TIPS increases with inflation and decreases with deflation, which is reflected in the interest payments that are made to the investor. For those with a more adventurous spirit, commodities like gold or oil can also serve as a buffer against inflation. Commodities tend to move inversely with the dollar. When the dollar weakens, and inflation is usually a sign of a weakening dollar, commodities prices go up. This isn't just about gold coins. Consider also oil stocks or ETFs that track the price of basic goods. They can add an extra layer of protection for your portfolio. 4. Crypto cash, digital gold or fool's gold. Cryptocurrencies have surged into the mainstream as a new asset class. Unlike traditional money, cryptocurrencies like Bitcoin are not controlled by a central authority and are seen as a hedge against inflation by some. This is because, similar to gold, there is a cap on how many Bitcoins can exist, 21 million to be exact. This scarcity can theoretically maintain its value, as fiat currencies may lose value under inflationary pressures. But here's a fun fact. Did you know Bitcoin's volatility is both a risk and an opportunity? Its price can swing dramatically, which means it could offer significant gains but also serious losses. As a rule of thumb, don't put all your eggs in the cryptocurrency basket. A small portion of your portfolio, say 5% to 10%, could be enough to boost your overall returns while keeping risk in check. Tax tactics. Save more by understanding more. Taxes might not be the most exciting topic, but understanding how to navigate them can save you a ton of money. Smart tax planning means you keep more of what you earn or invest. For instance, making the most of tax-deferred retirement accounts like a 401k or IRA can significantly reduce your taxable income. And lower taxable income means lower taxes, now and in the future. Also, did you know that long-term capital gains are taxed at a lower rate than short-term gains? If you hold your investments for more than a year, you benefit from a reduced tax rate, which maximizes your real returns. It's not just about earning money, it's about keeping it. By strategizing your tax moves, you can make sure more of your money stays in your pocket. 6 side hustles, inflation-proof income streams. In today's gig economy, side hustles are more than just a buzzword. They're a financial lifeline. Adding an extra source of income can help you beat inflation by increasing your earnings beyond the usual salary increments, which often don't keep pace with inflation rates. Whether it's freelancing, starting an online business, or investing in rental properties, the extra cash can fill any gaps caused by rising prices. Consider this. Many people have turned hobbies into lucrative side jobs. From crafting to coding, platforms like Etsy and GitHub can help you monetize your passions. Moreover, side hustles can also lead to greater financial security. With more income streams, you're less dependent on any single source of money. That's a solid strategy in any economy, inflationary or not. 7 global gateway, diversifying with international investments. Expanding your investment horizon globally can provide a safeguard against domestic inflation. When you invest in international markets, you're not just putting your eggs in different baskets, you're putting them in baskets in different countries. This is crucial because when one market experiences a downturn, another might be thriving. For instance, emerging markets can offer higher growth potential, which might offset the slower growth in developed markets. Remember this, international funds have historically provided higher returns over long periods compared to staying solely in domestic stocks. Diversifying globally also means you're exposed to different currencies, which can act as a natural hedge against the weakening of your home currency. It's like playing a global game of Monopoly, where each investment in a different country is a strategy to maximize your returns and minimize risks. Frugal yet fancy lifestyle changes that save. Living a frugal lifestyle doesn't mean cutting all the joys and comforts from your life. It just means being smarter about how you allocate your resources. For example, switching to generic brands for some products can save you a surprising amount of money without sacrificing quality. Did you know that many generic brands are actually produced in the same factories as their brand name counterparts? They often differ only in packaging and marketing, not in quality. Another tip is to embrace the sharing economy. Services like car sharing, tool rentals, or even wardrobe exchanges can drastically reduce your expenses. Why buy a fancy dress or an expensive tool you'll use once a year when you can rent it? Also, making energy-efficient upgrades at home like LED lighting or high-efficiency appliances can cut down your utility bills significantly over time. It's not just about saving pennies. It's about making smart choices that accumulate and protect your wealth against rising costs. 9 future-proof finances, tools and technologies for tomorrow. Embracing technology can dramatically enhance your ability to manage and protect your finances. Modern financial tools like budgeting apps and automated investment advisors make it easier to keep track of your spending and investments. For instance, apps that round up your purchases to the nearest dollar and invest the change can effortlessly build your savings. Furthermore, consider using blockchain technology for more secure investments. Blockchain isn't just for cryptocurrencies. It's being used to create more transparent and secure financial transactions in mainstream banking. This technology can reduce fraud, making your investments safer. It's like having a futuristic financial guard dog. By integrating these strategies, going global with your investments, adopting a frugal yet quality-conscious lifestyle, and leveraging cutting-edge financial technology, you can create a comprehensive plan that not only combats inflation, but also positions you for future financial success. Each step is about making informed choices that ensure your money works hard for you, regardless of economic fluctuations.